I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast, and today we're talking about the Fed rate.
The Fed funds rate.
September 18th, they announced, what they were going to do with rates, whether they were going to keep them the same, raise them, or lower them. So anyway, before we get to that, Tom and I just wanted to make sure everyone in our audience knows how much we just appreciate you listening to our podcast. We also just want to reinforce, what Tom and I do. We're mortgage.
You mean just how good we are?
Yeah.
Dang.
I think we're pretty good.
I think we're pretty good. That's right.
What do we do? We do mortgages.
That's right. Purchase and refi.
That's right. We are mortgage brokers. We work with lots of wholesale banks out there.
That's right. And I spoke to a guy. I was actually getting ready for work and took a call because we get quite a few calls, lots of different scenarios. And he really was debating between a broker and a banker. And after I talked to him, he's like, wow, I'm so glad we spoke. That makes so much sense. So please, think of us for your purchases and refinances. Just call. We'll have a chat. We'll talk through your scenario. We'll explain why we're as good as we are. Yeah. And again, if we can brag for another second, I mean, we really are. We're highly competitive. Very, very competitive.
Our pricing's very, very good. Real estate agents out there who have buyer clients who have, if you're an agent, you have not used us before, if you haven't sent one of your buyers our way, I really encourage you to at least just try. And I think you'll be amazed that our pricing is very good. And on top of that, our service, is second to none.
That's right.
Our communication from the process from when we start to when we close escrow. Anyway, we've really focused on that.
Okay, awesome. Okay. So hopefully you guys love us enough to give us a call. All right. So the Feds met today. They lowered interest rates, right?
They lowered interest rates. They lowered them to 2%, from 2.25% to 2%. And 10 minutes after they did that, I got a call from a borrower, a past customer. Eddie, I heard rates were lower.
That's right.
So we're going to say the same thing we said last time, in July.
Yeah, the rate, the Fed funds rate does not correlate 100% to mortgages. And there was actually an article that came out today. But the Fed funds rate affects consumer debt, affects ARMs, reverse mortgages, credit card debt, small business loans, anything that is tied to the prime rate. That's really what the Feds do. Yes, the Fed funds rate affects interest rates, but not necessarily in the exact direction that they push those rates.
Right.
So we thought it was extra important to tell people that today.
Yeah, and in fact, the moment the Fed lowered the rate, there was a lot of different things going on, but which can happen, the actual yield, which means the rates themselves, started going up a little bit. The market did not react like most people thought, rates are going to go down. Rates tomorrow morning, again, we are recording this on September 18th. So people who actually are listening to this will probably have several days, several days of market information that will either lower rates or raise rates. But right now, the reaction has been a little higher. A little higher interest rates.
Yeah. I was working with a couple of borrowers today, and we were talking about rolling the dice. Do we wait till the Fed funds, the Feds meet and announce their rate? And I kind of knew that it was going to be, potentially where it was today. But the borrowers, both of them, really thought that the rates were going to drop. And so when I called them and actually said, hey, you know what, it didn't go up a little bit. We can talk about this later. But there was a small little closing cost piece that went up. That's how sometimes interest rates move. They don't actually move themselves, but just the closing costs that are built into that rate can go up or down. So it was slightly higher today, if anything.
Yeah. And I'm going to show everybody here real quick. Tom, do you see this?
I do. Yep.
Okay, so this is the CME Group is showing the next meeting coming up October 30th, what the prediction is. Right now, they are predicting about 57% of the analysts believe there will be no change. It'll stay right here at 2%. about 42% believe the Fed will actually reduce rates again. So the next Fed meeting is October 30th. So many things are going to happen between now and then.
Mm-hmm.
And the expectations, all the analysts, those percentages are going to change, but
right. So as we've mentioned before, starting now until the next time the Feds meet, the market will be anticipating what the Feds will do. So one of the key factors is if the Feds do something totally different than what the market thinks they're going to do. So as long as the Feds do what the market thinks, typically there's very little change.
Yeah.
But if they come out and they swing a different direction, then that could really change things. Also, in this article, I thought it was interesting. The actual headline had said higher mortgage rates despite the Fed's rate dropping. It's that bam. It is just so timely for us.
Yeah, that's right. I'm going to just share that here real quick. And this came out today, and higher mortgage rates. You see that, Tom?
Mm-hmm.
Yeah.
Mm-hmm. Very interesting.
Good article. A lot of stuff. September, it was just released. This is Eastern time, but anyway, higher mortgage rates.
Something else that I think is interesting, and it's in that article, is talking about the correlation on. Are you sure mortgage rates aren't directly connected to the Fed funds rate? And one of the proofs for it not being connected is what was in that article, which is the Feds only meet 8 times a year, yet mortgage rates will change every business day of every year. And what is underlining the mortgage rates are the bond rates, which will change 100 times a day. So there's so many things at play that there's no way that the Fed funds rate directly tied to that mortgage. So always worth keeping up to date and checking in with us. But just because they cut it a quarter doesn't mean interest rates go down a quarter.
You got it. All right. I think we're ready to go home. If anyone has any questions or looking for a rate quote for a purchase or refinance, reach out to Tom or I. We'll be happy to help.
We'd love to help you. Thanks for listening, guys.
Time to go home.
All right, let's go home. See ya.
Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 at 1618695, Equal Housing Lender.